Hello, everybody. Hope everybody had a good Thanksgiving vacation. The weekend was good, except the fact that the Steelers lost to Cleveland. Yumping, Jiminy Christmas. All right. Well, as we can see today, we had some profit taking, which was not unexpected after a big day that we saw on Friday. And note where it came up to on Friday, right up into the T line or to the 200-day moving average area. So some profit taking today. The Dow was hit, I guess, the hardest, but it kept giving the appearance of being a profit taking day because most of the day the NASDAQ traded off very lightly or very mildly. It showed that they weren't bailing out of this market. So that kind of confirmed that this was more of just profit taking and not to really have any good or any great concern. So that still puts us in a situation where we're probably going to at least test the 200 on the Dow or on the NASDAQ. I wouldn't be surprised if we don't test the 50 on the S&P 500, which makes the next target up here at the 50-day moving average for the Dow. So wouldn't be surprised maybe see another day or two of clunkiness right in here, waiting for the T-line to catch up and maybe kind of have a T-line crunch through the 200. Nothing out there that's really going to throw this market off. You see a kind of a slow rounding bottom in crude oil, but it really doesn't appear to want to be going anywhere. It's just basically a sideways move. Interest rates are just staying up here in these, the bond prices are staying up. The interest rates staying relatively low. And gold prices. Gold prices were up a bit. They came up through the 50, bouncing off the T-line. Still in an uptrend. Same scenario showing up in the silver prices. Notice how the T-line is acting as a good support move or a good support level for the silver. Sugar is one that I'm probably going to be shorting tomorrow on weakness. Notice how when it got up close to the 50, it failed again, kind of a bearish J-hook. Could not get back up through the T-line today. So if they open this weaker, I think we're probably going to wave 3 to the downside. I've been long was short there in soybeans for a while until we saw the bullish Harami, and it started back up. Right now, long soybeans, and have been long feeder cattle, except tonight, if it trades sloppy, it'll probably close out this position. And lean hogs. Been long lean hogs ever since the J-hook pattern, consistently moving up. Okay, what else do we have? Sugar, I can't think of too much. Anyways, a few of the picks that we've gone after. Okay, we did gold. Let's see, copper. Slow uptrend also. This one you want to stay with as long as it stays above the T-line. And natural gas. Natural gas took a kicker signal to the downside, right about the same level that it topped out before. Probably need to go short natural gas, and natural gas is not a hard trading entity to go short. They are finding more and more around the U.S. Uh, corn is in a slow uptrend. I better make this steeper since it does look so very slow. In an uptrend, but you've got a lot of overhead to break out through to get this into a big move. Wheat, same scenario. Wheat has been caught in kind of this sideways range for a while. It is in an uptrend, slow as it is. But at least should play up here to at least the 50-day moving average and then see what it does from there. Yeah, the transports were strong. The REITs have been strong. And today the utilities were fairly strong. So, all right, let's see. Let's take a look at some of the stocks. APKT was one that we recommended or re-recommended because it's got this little J-hook pattern setting up. Did a doji today, so I'm looking for a doji sandwich tomorrow that if they move it higher, they're moving it out of this trading range, which puts us with a good push up toward the 200-day moving average. GDOT was another one that had a nice little kind of cup and handle. This would better. Also did a doji today, which makes this one a very attractive one. If it opens positive, it's going to move positive, which means it's probably going to break out to this level and give you a good healthy move. Digit, another one with anytime you see that big huge move, that's usually going to be the beginning of a new trend. So it did a nice little curl up today. I'd keep an eye on this one for trading here in the very near future. This one I think is going to make the big money over the next few days. Q-Core. Because Q-Core is having this rounding bottom. Notice what it did today. Came up through the 50, used the T-line and the 50 as support, and moved higher. Now you got this slow curve that's breaking out. Your upside potential, I better make this a little bit flatter, I guess. Could be back up here to the 200-day moving average. As you can see, there's not a whole lot of resistance over here. It's all done in one motion, which means there's not going to be any or too much resistance to the upside. This one I've bought, I think the 26 and 27 December calls, I think for 85 cents and $1.20. I think it was last Friday. These can easily turn into $10, $12, $15 call prices. Now, there's a difference in buying straight out calls versus spreads. Usually I buy a spread when I can see that there's a potential target in a kind of a calculated move. Whereas something like this is getting ready to break out of this rounding bottom. We don't know how fast they'll take it. So it's just kind of I use just a straight out call maybe 20% of the time. And that's on situations where you're going to get the big breakouts. And where you're going to get the big breakouts are places where you see the potential, like a fry pan bottom breakout. Now, we've been in SRPT here for a while. We can see this coming back up. Even if this one fails, it may fail up here at 45, which from the $32 range, that's still a good, I can figure this out, 40% move just to get to the failure target. So this is one that I wouldn't be afraid to be buying straight out calls, because if it moves, they're probably going to pop this one real big. And MTE. Oops, that's that. NTE. Nice little fry pan bottom now, just starting to break out to the upside. This one I wouldn't be afraid to be buying using the halfway point of this candle as your stop. CVLT. Another one's got kind of rounding bottom and just now breaking out into new territory. Glenn, it really doesn't matter just as long as what size I'm going to be buying is not going to be throwing things out of whack. If I'm going in and buying 2 calls of something, it doesn't really make any difference. I'm going in and buying 50 calls of something, then I'll check to see how much open interest there is. But obviously, I want something that's got enough liquidity. If I'm looking to buy a big chunk and it shows there's only 30 open interest in the calls, there's no sense trying to go in and buy 25 calls of it. You're going to be, at that time, fighting with the market maker to get in and out of your positions. Carl, it all depends on if I can see that I've got a good, steady moving price, I'll probably buy the in-the-money calls. If I've got something, what were we looking at? Q-Core. I got something where I think the upside potential is huge or real big, but maybe a long shot, I'll probably buy out of the money calls and only have a little money exposed with the idea that if it doesn't work, I've only got a little money exposed. If it does work, I've got a big upside potential to it. What was the symbol before? Was it NET? Or NTE? Why will NTE not pull back toward the 200? And are we looking at the same chart? Yes, I will do options trading soon. Unfortunately, it will probably be after the Christmas holiday. Why would this pull back toward the 200? I mean, what's the indication saying this is going to pull back toward the 200? Remember, moving averages are just moving averages. It's this we're looking at to tell us what the price is going to do. So what's the distance have to do with it? If they're buying this stock, it doesn't matter where the moving averages are. And that's exactly why, I should go right back to Q-Core. This is why some people pay attention to the Greeks. This is why, to me, that's exactly candle trader. No, I do not look at delta or theta, because your delta or theta looks like this. So it's going to be based off of this type of movement. When we know the reaction to this type of setup could be a strong, real strong movement, having absolutely nothing to do with this theta, beta, delta, or anything else. I'm looking to see what's happening to the price movement, not what the previous history is telling me. Because the candlestick previous history is telling me there's something new about ready to happen. What calls would you buy for SRPT? Because we're close, well, we're not that far from December. December is 3 weeks away, 4 weeks away. I would still probably be buying the December calls. And now in this case, where the calculated move may still be in progress until they hit a breakout area, I might do the spreads here. And it might be buying the 35s, selling the 45s. Until it gets, Yeah, I'd probably be doing that strategy right now until I start seeing a breakout. Once I see a breakout, then I'll pick something up much higher that has little money exposure, but a high profit potential if it gets through that level. Gamma rated, all right. Okay, let me zip along here. VC is another one that I bought the calls for. Because we can see this is a nice little rounding bottom, just now breaking out. And I think I went up to the, I bought 55s, which were basically cheap, like at 35 cents or something. Maybe it was 40 cents. Because my rationale is, if it doesn't get there, all right, I've got 40 cents per contract at risk. 45 cents, all right. If it does get there, if it moves from 42 to 58 points, it moves here from 50 to 58 quickly, meaning like with time left over in the calls, those calls can go from 45 cents to hopefully $3.50, maybe even $4. So the risk reward at that point makes it worthwhile just buying the calls outright. Let's see, SNTS is another nice rounding bottom. Just notice how it gapped up today. Tells me a little bit of energy starting to come in, especially right here where it's at the breakout level. That's the time to start looking to be buying either the calls or the stock. XRTX, we've had in the portfolio. That was, I forget who was showing us that in the chat room. But right now, it's just been a nice, slow, steady eddy. But notice it's picking up some steam now, which usually indicates a breakout about. Okay, thank you. So it's that information that might send this one up quite strong. Now, when one of these companies have one of their drugs approved, it doesn't do, it does something to the stock because now the potential is that these little companies are not going to be able to market that product. But if they market it through somebody like Milam or Baxter or Johnson & Johnson, one of the biggies come in, and they do a partnership where the big company puts up all the funding and the little company that has the product puts up the product. And that's what usually skyrockets these small companies. All right, what else we got here? S-Fun. Another one's got a nice little rounding bottom, kind of cup and handle. Wouldn't be afraid to be buying this one, expecting it to break out into a wave 3. And SMCI. Another nice fry pan bottom. Wouldn't be afraid to be buying this one on positive trading. Remember, a fry pan bottom starts working when the stochastics get up toward the overbought condition. That's where the enthusiasm has come in. All right, let's take a look at a few before I get to what I want to concentrate on tonight, which is gap ups. How effective gap ups are. Here's one that I wanted to show. Might be a short at this point because this was either a breakout, but when they gap it back down, notice what we've got up here. We've got that little abandoned baby. So if they open this one lower tomorrow, you want to be shorting. This is one of the ones some people were asking for shorts. This one's a good one to be going after on weakness. RATE. It's got another good looking chart. That little cup and handle or J-hook pattern. Notice a little slight gap up here. Let's make this bigger. Notice when they pulled back, After a good strong move, now you're getting the J-hook pattern, couldn't close below the T-line. I'd suspect your next target is the 50-day moving average. Is it a cradle? Not really a cradle. Usually you want to have three, at least three. And this is more like a morning star signal, but more in a, again, a J-hook pattern setup. Slab has a nice little scoop pattern setup. Flat handle, scoop. There's your doji, which means if it opens positive tomorrow, doji sandwich, which means it'd be breaking out through this area, which would be your slingshot effect coming out of a scoop pattern. WHX, also another scoop type pattern setting up. Kind of a flat handle, and now starting back up again. Let's see. Okay, thank you. Let's see. Don't you worry about previous gap on rate. Okay. I don't worry about it at all. As a matter of fact, I want to see it get up into this gap, because once they get into it, there's no overhead supply, so that's where it's usually going to run pretty quick. Well, not necessarily. Now, the ultimate is, you want an oversold stock that's showing a candlestick buy signal. However, you've got the patterns that do not correlate with oversold. They'll usually be in the overbought condition. When they start moving out. Yes, WX or WHX is below the T line, but what is some of your strongest signals? Notice you've got a left-right combo right here, a good distance away from the T line. Stochastics oversold starting to come up. You can see that there's a potential scoop pattern. If you're buying this, it's with the idea that you're more than likely going to see it come up through the T-line within the next day or so. If it doesn't, if it turns over, you get back out of the trade, because that tells you the T-line is still acting as resistance. But right now you're getting too much evidence that there's strong buying coming in, especially a left-right combo. That is a very strong indicator of a good, strong trend to follow. Okay, before I forget, we're getting a lot of new people in the chat room each week. We've got somebody working on a cheat sheet for all the 3-letter messages. So that NDH, which is new day high, is understood. All those type of things. Also, we are going to be starting to put out more of the formulas. We had gotten good response on doing the formulas for the. I'm not going to be able to think of it. What were we doing a formula on? Just on the doji sandwich. So as I'm working on revamping some of the trainings for the 12 major signals and the patterns, I will probably be coming out to everybody to do a new or what formulas have been working the best for each person, and then be in the process of converting those formulas to each of the major or all the major formulas, or the formulas to the formats that we're using, like TCNet, Metastock, NinjaTrader, Thinkorswim. So everybody's got a set of formulas to go back after. Yes, in my daily picks, I usually do commodities. It's just I haven't found any recently that looks like it's going to do a strong trend. So a lot of mine are just trades, which I will mention in the chat rooms. Which one of the AMAs is the strongest resistance? Allie, it all depends on where we are. Usually it's the 50. And the 8 exponential moving average, the T line, is very good for maintaining a trend. That if you see a candlestick buy signal and a close above the T line, you're in an uptrend until you see a candlestick sell signal and a close back below the T line. And what do we? Oh, BONT, B-O-N-T, another one that is looking like it's starting to come back up and heading back up to the top of the trend channel. All right. All right. In the past, let's see. I had a couple other announcements, I think. All right, we're going to be revamping all the formulas. We're going to be doing up a cheat sheet. And if everybody will notice, way down in the right-hand corner of their screen, there's documents. That's where if you come up with a formula. Now, the reason we want to have people do the formulas in here is so that everybody's not reinventing the wheel. That if you've got a formula that is working pretty good, somebody else may take that formula and tweak it a little bit better and add something to it or do something to it to make it work a little bit better so that everybody's not working in tandem, they're all working all together. Klaus, I do commodity, as I say, I do commodity picks. I'm usually trading commodities every single day. Right now, I just don't have any that I see a strong uptrend, and most of them are just short-term trades. But when I do see one, I will make sure it's listed somewhere, either in the morning comments and in the chat room. Okay. Yeah, and before I go into gaps, a little off the subject. I've now got the history of the North Pole on Kindle, Nook, and I think they're getting it up on iPad. And the hard copies will be here hopefully by the end of this month, meaning the end of this week. So if anybody's interested, I will have a package out that if somebody's willing to put a good comment on Amazon or Barnes & Noble, there'll be a big special for doing that. And as a matter of fact, I'm sitting here watching the O'Reilly Factor. They're supposed to have one of the ads on there tonight here in the Pittsburgh area. If you buy it directly from iPad or Amazon, and you put up a comment, all you have to do is email Abraham at Candlestick Forum and say, I've put up a comment on whatever, Amazon, Barnes & Noble, and we will make sure you get a special, which I haven't thought of the complete special yet. Thank you, Betsy. And I want to, while I'm at it, give Betsy credit. She probably worked harder on correcting all my errors in the book. Probably took her longer to do that than it took me to write the book. So I'm greatly appreciative of all the elbow grease she put in to help straighten things out. And I hope Big Ben will be back for Baltimore. All right. Now, I've also told people a candlestick signal followed by a gap up is your best friend. And if you don't believe me, just go back through your charts and watch what happens when things gap up. But I know none of you have gone back through your charts and done that. What is the name of the book again? The History of the North Pole. It is a highly researched documentary on how Santa Claus got to the North Pole how he discovered the L's, how the candy cane was developed, all sorts of things that your kids have probably been hounding you on wanting to know, and you don't have the answers to. Let's see. And this wasn't anything to sidetrack from the investment business. This was just a relief that if you're sitting at the screen all day looking at charts, you want to figure out something else to do after a while. I wake up every morning with not nightmares, but trying to figure out what this latest chart was saying and where was I going to get the money to put into that trade. And I wake up, go back to sleep, and then all of a sudden that chart is different. Now I have to think of what I'm going to do. So anyways, notice the fry pan bottom, and notice where this really started moving with the little hammer gap up. The gap ups are your storytellers. They tell you when things are starting to change. DDD, hammer, gap up, starting to make this a very strong uptrend. Anytime I see a gap up, I'm going to take an extra interest or extra look. Now, thank you, Sam. At that trade, because that tells me there's a force coming into that trade. And if that force is breaching things like the T-line, it gives me that much more impetus to get into that situation as long as it stays above the T-line. ECYT. Those are doji gap up through the T-line. That's just this right here, even though it doesn't look attractive, I mean, man, that moved already. It usually indicates there's going to be a lot more coming behind it. ABFS. Oops, let's make this big enough where you can read it. Doji gap up. Doji gap up and a close above the T line. We want to be buying over here. SSYS. Hammer, gap up above the T line. Sideways motion until we get this gap up. Then we're breaking out of that sideways trend. Deck. Deck tells me something's happening because they've gapped it up through the T line, pulled back, they gapped it up again, going into the 50. The stochastic still coming up. I would suspect that you're going to see it come up through the 50. These gap ups are just power indicators. If it gaps up, touches the T line, and a day later gets back to where it started, would you still consider having a strong force behind it? If it gaps up, touches the T line, and the day later gets back where it started, no. That gap up probably was exhaustion at the top. You've got to consider where your stochastics are and where you are in the trend. You've got the gaps at the top, which we'll look at some time. But right now we're just looking at just kind of refreshing everybody's memory or eyesight that anytime they see a candlestick signal in the oversold area followed by a gap up, it's going to produce a strong price trend. It usually will produce a strong price trend. Rate, doji gap up. Now, got a J hook, left-right combo, gap up. Remember, that gap up is that force that you want to be going with. eBay. Notice it gapped up from the Morningstar type signal. Stronger than bear's breath today, taking it out into new territory. And this was a gap up to get it there. Also, notice we're not in the overbought condition yet. So when they gap it through a resistance level, that means everybody knew that they were getting toward the resistance level, and they were still gapping up to get to it. It wasn't like they were gapping up to get there and quit. They were gapping it up because they felt that resistance level was not going to hold them back anymore. RNF, just starting. Gap up. Notice how it's staying above the T-line. This probably has more upside. I say probably has more upside because anytime you see that gap up and then they stay above the T-line, that means that force is staying in progress. IN. IN, as you can see, was an upward. Every time we got to the bottom of this trend channel, gap up. Now we're back to the bottom of that trend channel, gap up. Where's it going to? I would draw a line through the bottom, the top of that trend channel. Dividend payout 9%. All right. What else I got here? Did I do pantry? Yeah, the gap up right here. Just a strong trend after that. And PHH. Whoops. Morningstar signal, gap up. Now you had kind of a downtrending channel, and they gap through that. That tells me there's more upside. So what's the difference between a gap up at the top and the bottom? Well, if it just gaps up in no man's land, that's probably exhaustion. But if it gaps up at a technical level that you can see would be a resistance level and gaps through it, that means there's probably a lot more upside after that. For N, the initial buy moment was not until Friday. Ooh, let's see, I don't know. I was just using some of these as examples of. Yes. Friday when it gapped up from the little doji up above the T-line, kept going. That told you that now they're moving away from the T-line and they're back into the trends. XPO gapped out through this level. Tells you there's more upside. So I'm just kind of showing these that the more you become comfortable with trading after a gap, the more money you're going to make. Doji, let's make this a little bit bigger. Doji gap up through the T-line. Just good strength after that. And just do a few more here. Now, RIM was the same question of why is this gap up important? Because it gapped up through the 200-day moving average. That tells you that 200-day moving average was not a significant factor anymore. How do you screen for doji and gap ups plus oversold on stochastics? Or is it all visual? No. One of your scans can be stocks trading below, with stochastics below 20 and formed a doji. So now you have a doji in the oversold area. Then the next day, you want to sort to which ones have the biggest percent move to the upside. When you do that, the top ones are going to show probably some gap ups from those dojis, and those are the ones you want to go after. Not a difficult scan at all. Is a kicker signal always a down day followed by an up day or vice versa? Yes, a kicker signal is I'll find one. Anybody remember a kicker signal? Yeah, a bullish kicker is when you've had a downtrend and your last candle is a dark candle, then the next day they gap up above the open of that dark candle and go the opposite direction. So they've actually gapped it up and then started trading positive. A bearish kicker signal is when you've had an uptrend and then they gap it down below the open of the last white candle and go the opposite direction. They've kicked it in a downward direction. Let me see what else we got here. CSC is one that we recommended not too long ago because of cheese futures. No way. CSC. Because this gap up right here. This told us something, that there was new strength coming in. This told us, notice how this was indecisive pullback, and then we have a doji gap up. That tells us that force is back there again. Let's see, SMBL, not a true bull kicker, but still a strong signal, the doji gap up. A kicker signal is going to have the last dark candle about the equivalent of the next bullish candle. They're usually big candles. Let's see. Yeah, that's a kicker signal. See where this one opened, closed down here, then they gapped it up above the open and went the opposite direction. So it's not a clear kicker signal, but it gives the same impression or the same results. They've definitely come back in with strength on this one, which means there's usually going to be more strength to follow. Should the day after the gap up open strong to buy? Should the day after the gap up open strong to buy? You still want to use the same parameters you use on any open, that you want to see that the bulls are still around. If it does open lower, but not tremendously lower, you don't have to jump in right away. That's where you put your buy stop one tick above the previous day's close, because if it opens lower and then starts moving up through the close of the previous day, that pretty much that pretty much tells you that the bulls are still there. Let's see, you want Wishscan, Vitrum, yes. Does somebody have the bull and bear kicker signal? Now, the difference between a bull and a bear kickers is that you don't have to worry about stochastics. The kicker signal is so strong that it doesn't matter where it occurs. It's going to act well. AIR, notice the doji gap up. This one still can be bought with the anticipation it's moving up here to the 50-day moving average. Is a bull kicker safer in the oversold area versus an overbought area? Not necessarily. Now, obviously, it's probably a little bit safer as far as investor sentiment, but a bull kicker in the overbought area is still giving you a very strong message that even though it's in the overbought area and they're still willing to kick it up again, that tells you there's going to be more upside. And SWC. SWC had a left-right combo, gap up. Notice he went from a sideways trajectory to a very strong trajectory. BIOS. Kicker followed, not kicker, gap up from a doji. Left-right combo. Now you're in a steady uptrend. There you go. Thank you, Martin. And what did I just do? BIOS and HL. Hecla Mines, piercing signal, gap up, staying above the T line. This one can still be bought on positive trading because of this right here. That's kind of the force in this move. Let's see. And this is why you need to know what your signals consist of. Let's see if we can see a left-right combo on here. Here's a left-right combo. A doji followed by a bullish engulfing signal. The doji is kind of your left jab indecisive. The bullish engulfing is that big roundhouse right that puts somebody away and starts a new trend. So it's a left-right combination, doji, bullish engulfing. It's one of your strongest signal patterns. And what was I doing? I forgot. Let's see. HMIN. Oh, no, that wasn't it. Let's see. It was LYB. This is why it's important to know your exact factors or features of a signal. Oh, I'm just running around like a hanyap here. Come on, get this. So, notice what signal this is right here. Well, I'll move it along a little bit. This is not a signal. It opened above the previous day's open and it closed above the previous day's close. So it's not a harami, it's not a bullish engulfing signal. It's just a strong up day. Now, if this had any beneficial features for knowing what this should be doing, the Japanese rice traders would have given this a signal and told us what the results would be. There is no reversal signal for this, so the implication is this is just an up day and a downtrend, not necessarily a reversal. It also kind of implies that if there is going to be more upside, it's not going to be very strong. Just watch to see what happens at the first resistance level. And there we had a big shooting star doji, and now we've opened lower. This tells me that this was just an up move based upon a non-signal, that they've taken it up, they failed, they're probably taking it down again if this is going to be a bearish J-hook pattern. Okay, HIMN is a short. Even though it's had some bullish days, it's still a short. It can't get up above the T line. And KBH, some of the housing stocks, had a little blip the other day, but notice how they're starting to fail at the T line and the 50. That means there's a good possibility they could take the housing stocks back down to the 200-day moving average. All right, I guess that's about all I've got for tonight. SWKS on a kicker was a good bear kicker that really didn't work out. Correct. The next day was a bullish harami. That told us that this bearish kicker better have some more downside to it, which it didn't, and it better happen fast. Now, there's a little kicker signal where it opened here and closed down here. Then they gap it up above this open and go the opposite direction. I guess if we made this bigger, I wouldn't have to be. So that one's a kicker signal back to the upside again. Can we use the 200 MA as help? I don't understand what you mean. Obviously, the more you can add to a kicker signal or any candlestick signal, whether it's bouncing off a trend line, bouncing off a major moving average, off a Fibonacci number, anything that you can apply to that chart to add confirmation that that's why the buyers are in at that level. Remember, the signal told you what's happening. The other indicators are just confirmation of why it was happening at that level. Okay, any questions on candlesticks? Oh, LM for small accounts like 5,000, you're just wanting to use it as a learning experience, but you don't want to get clipped in your commissions too bad. I don't know, 2 or 3 positions. Again, that would be a size of account where you're just kind of learning what more of the mental process. And, yeah, I wouldn't have more than 2 or 3 different patterns on. You get your pattern, or you get your positions too small, then the commissions become a major factor. Okay, on Amazon as a bullish kicker, but the last several days were up days. Okay, let's see. Amazon. I don't understand the question. Shows Amazon as a bullish kicker, but so last several days were up days. A bullish kicker. I don't really see it. You've got a spinning top and then bullish confirmation. I don't see a bullish kicker. Now this has the makings of a bullish kicker, but we didn't open above the previous day's open and went higher. We were just an up day and a downtrend. Otherwise, I don't see a kicker signal in here. Beavis, do you see any signal? Not yet. There is a double doji set up, which means if it opens positive tomorrow, you can be buying immediately. Can you define a cradle pattern? A cradle pattern, here's something like a cradle pattern, has a big down day and then has 4, 5, 6, 7, 10 flat days. Now, these days aren't quite flat days. Usually it's a flat trading area with a bunch of dojis, spinning tops, inverted hammers, small hammers, and then a big day like this. So this becomes your headboard, this becomes your bed, this becomes your footboard, and then the result is usually a very strong uptrend. Whoops, everybody's scrolling past me here. Heiken Ashi for trends, do you like them? Chris, I helped a few people kind of develop some Heiken Ashi charts, but let's put it this way. The 8 exponential moving average outdoes everything else out there. We've had John Bollinger on here a while back, and he even admits that his Bollinger Bands are more for general trend, whereas the 8 exponential moving average is a very exacting trend. Heiken Ashi kind of, I don't say vanilla sizes the trend. SWKS, what did we know? When did we know the kicker failed, and when was there a buy signal and a close above the T line? SWKS. Probably somewhere around in this range that you should have been. If this was a kicker signal to the downside, we should be seeing more downside. But the first alert was that we had a bullish Harami that should have told us that the selling has stopped. And so even on this day, with it closing back up above the open, should have been a little indication that we weren't going down very fast. So somewhere right in here, after 3 or 4 days of a strong sell signal and nothing is confirming, then I get out and move on to something else. GDOT, yeah, you can do that on any one of them. Not on this case. You don't have to do too much. All you have to do is use the the T line as your stop. So this is where you would have been stopped out. This is where you would have been getting back in, and you stay long on this one as long as it stays above the T line. What about a signal followed by a gap down? Well, if you have a signal and it gaps down the next day, that's doing, you got a candlestick buy signal that gaps down the next day, and that's telling you that the bulls aren't there. You just leave it alone. That one's not working. I was referring to the stock you were talking about. That was not a signal. Okay. All right, John. Repeat the question. Oh, that may be down here ways. Well, Shazam. No, I can't remember what your question was now. And it was LYB. Oh, because of the 200-day moving average? Yes, but even though we're at the 200-day moving average, are we seeing, we've got to ask ourselves, are we seeing a reversal here, or are we seeing a bounce? And because we don't have a signal, we've got to infer that it's just kind of a bounce, and it might be coming right back down to the 200. MDR kicker, yes, that's still in play. That's a double doji. If it opens positive, you want to be buying immediately. There are cruisers, yeah, the TC say that it's a kicker. What I have discovered in many years of trying to find some sort of software that was going to pinpoint it is that so far I haven't found a software that does the signals accurately. I mean, they will find you Morningstar signals, but your Morningstar signal might be in an overbought condition, which doesn't make it a Morningstar signal. Shooting stars, all sorts of signals can occur, but if they're not occurring at the right condition of the trend, they're not a signal. You've got to have everything set up. So that's why I always tell people until somebody comes up, and the problem with trying to do formulas, mass formulas for candlesticks, is because there's so much information built into the visual aspects of candlesticks, much more than we can even consider, because if you start writing a formula for a signal and all the other conditions surrounding it to make it successful, it just starts mushrooming. You keep coming up with more formulas for this aspect and that aspect. These are all things that are being automatically assessed in our minds, or because of our visual, but trying to put it all in a formula is a lot of work. Is it a different chart service to use during your daily comments? The charts look different. Yeah, I use a CQG at night because I trade commodities off of them, and to me it's got better graphics. And then I use TCNet during the day, and we'll probably be moving to Metastock during the day also. Wasn't there a cradle pattern on the Dow? Not quite a cradle pattern. It's more of I usually call these Morningstar signals with two indecisive days. Now, when they go out to 3 or more, then I put them in the cradle the cradle definition. If I am using daily charts, is it best to wait until end of day to make next buy and sell or hold? Yes. If you're buying and selling based upon daily charts, or if you're buying based upon daily charts, then you want to be selling based upon daily charts. So using a daily chart is a function of how long your trades last. If you're a day or swing trader and your positions are going to be 2 to 10 trading days like I do, you're going to use a daily chart. But if you're kind of a fast swing trader, like a day or 2 or 3, you might now be using a combination of your daily chart and your 60-minute chart. So it's all a function of how often you're trading or how fast you're trading. Okay. Is there a minimum number of candles for a cradle? And does the first one have to be red for a bullish cradle? Yes. Usually you're looking at a red down day, a big down day that ends with a doji the next day, and then a series of dojis, and then the green candle. But as I said, the cradle pattern is usually a minimum of 3 indecisive days. When you have 2 or 1 indecisive day, that's the morning star signal. LM, that question comes up all the time, and there is no, well, the ticker signal is the most powerful. There's no signal that's stronger than another because sometimes in the markets, it might be hammer signals that are predominant in this month's trading. Next month, it might be bullish harami. So it's going to change based upon the investor sentiment in that market. I still have trouble with where to place my stop after I am profit positioned. Example, the stock is well above the T line and no sell signal is evident. If I place my stop below the T line and wait for a sell signal, I risk losing my profits. Thoughts? Mine is if I'm in a very profitable trade, trying to think of some. If I'm in a very profitable trade, I'm usually, and it's in the overbought condition, and you're seeing big candles to the upside, I'm putting my stop at the open of the previous day's candle. But if it comes back down through there the next day, that tells me the sellers have taken control. Even if that's above the T line, that's fine. I can always see what it does when it backs off to the T line. What extra information is in the hard cover Eliminating Trading Fears book that you wrote? Mark, that's probably something, oh, there's John's. Yeah, that's something, instead of asking me, ask whether anybody else got anything out of it. Opposed to your ebook, it just goes into a lot more in depth of the different fears that we all experience. And fortunately, I could write quite a bit about that because prior to candlesticks, I was probably one of the worst in the world and carried a lot of that badness over into candlesticks. And candlesticks helped kind of cure that for me. Yeah, not to sound like I'm tooting my own horn. I don't think it would hurt you at all to read it. Oh, it's on there somewhere on the website. There's products and services. It's all our products and services are listed in that area. All right, Jim, let's go ahead and do the double line. And let's redo the double line in 10 seconds. Okay. Kunar, you didn't put one in. What happened? CVLT. This one I would be buying on positive trading tomorrow. It's probably going to be on the recommended list. The pullback, doji, gap up into new territory, stochastics coming up. Should have another move along the same lines as this. Okay. BBY. Now that's a Morningstar type signal, 2 indecisive trading days. So if you're a buyer, the first thing you want to watch is to see whether it's going to be a positive open. If it opens positive, that's exactly what you need to confirm, but you're still not above the T line. So the next thing you want to watch for is you don't want to keep from buying because of the T line. You just want to buy and then be very diligent to see what happens once it gets to the T line. Now, there will be times when you're very close to the T line. You might just say, all right, I'm not going to buy until it gets up through the T line. GNRC for a short. Yes. That's a good looking short. Mainly due to the indecisive trading gap down through the T line. That's sending a strong message. CBB, this one's got a nice rounding bottom. Make sure the volume is good. It's close, yes, 400,000 shares. This one you can be buying using the T line as your stop. What happened there? S.FXEN. Another one that can be bought. Just be careful. Volume on this one's only 300,000 shares. You can buy this on positive open. Just use the T line as your stop. ACCO. Another one that Doji today can be bought immediately on a positive open. ONXX. S.ONXX. This one came up, you can stay with it as long as it stays above the T line, but it better open positive tomorrow. If it comes back down through the T line, you want to close it out. The hanging man lower open, and then or trading below the T line tells you the bears have taken control. WPRT. Another one that can be bought in positive trading, but as you can see, it needs to break through this downtrending channel to get any running room. LOPE, flat as a doornail. This one, if I was in it, I'd be out of it, and then if I really thought it was going to do something, I'd put a buy stop at $23. If it came up through there, I know it's moving. AEM, this one, slow, steady uptrend, which might keep you from wanting to really own it because it is a slow, steady uptrend. You're getting right up near the top of the trend channel again. KORS, another flat, where I'd probably, if it opened or trades flat tomorrow, I'd close out the position and then put a buy stop somewhere above this trading range. ANN is still rolling over. This one you could probably short with the anticipation it's going down to the 200-day moving average. McMoran. Oh, that got the wind knocked out of it. That one, yeah, that's harder to tell what to do because there's probably going to be a bounce in it. And so if I was short, see, this is the reason if you want to know your signals, there's a left-right combo closing right on the T line, which tells you one thing. It needs to open positive and trade positive. If it opens lower, you close out the position immediately. So had we owned it, we would have been out on the open, seeing that it was opening lower, because it needed to open this way and start trading up. Is this Shaw Group or Sherwin-Williams? Sherwin-Williams. Another one that I wouldn't be buying only because it's in a slow uptrend and there's really nothing much you can do with it from here. It's riding along the top of the trend channel. ASBC. This one you can be buying and anticipating it needs to break out through this level. Could take you back up here. Just oh, that's not a magnificent move. Yeah, it's in an uptrend. If you own it, you continue to own it, but it doesn't have enough juice in it to want to go buy it. Another one that's still in an uptrend. You can continue to hold until you see a sell signal. Zip. Zip, closing at the lower end of the trading range gives us a good indication it's coming back down to test the T line. So, but we don't know if it's going to stop there. So on any weakness tomorrow, I'd be closing out the position and then wait to see what it does once it bounces or hits the T line, whether it bounces off of there. Lennar, another one that's in a slow, steady uptrend, which doesn't make it very exciting to trade. More than likely, it's going to continue in a slow, steady uptrend. Costco. Wouldn't be long or short this one. This one's sideways and has nowhere to go. XXIA. This one you can be buying, or at least holding. Just watch to see what it does once it gets to the 50. GSVC. That one looks like a nice little scoop type pattern setting up. But you only traded 88,000 shares in it today. That's dangerously low. Sneezes going on here. But it does have kind of that scoop pattern. But, yeah, I wouldn't trade it because of the volume. Las Vegas Sands. That one's got that gap up. Doji, another gap up. You stay with this as long as it stays above the T line. And MMM. Another one that I wouldn't trade. You can see it stays in sideways batches, and it doesn't move a big enough percentage to want to be in one way or the other. Let's see. We did ACCO. Whoops. Well, where did I go here? IMGN. This one you can be buying on positive trading. You got a left-right combination coming out of a little rounding bottom, fry pan bottom. I wouldn't be afraid to be buying this one on positive trading tomorrow, simply using the T line as your stop. NVDA. There's your doji sandwich, which means there's more upside. I would suspect at least up to the 50, then see what it does from there. Jive. This one you stay long until you see a sell signal. Notice how it came back and tested the 50 to see if it was acting as support, which it did. Facebook. Broke out of this trending channel. Notice it did it with a kicker type signal. Opened here, closed here, gapped up and went this way. Tells me there's still more force and more upside in it. BPRT, also a little rounding bottom. This one you can buy with the expectation it's going to come back up here to fill this gap, which is also coming up to test the 50. BONT, left-right combination also. This one you can buy on strength. GDX. Gap up, staying above the T line. Stay with it. You've got this downtrending channel that it's got to get through, and then it's got the 50 to get through. But right now it's in an uptrend. Just watch what it does once it gets to that trend channel. Home Depot. Home Depot is another one of these I wouldn't trade just because it's an institutional stock and it doesn't have enough volatility to make it worthwhile. Apple is another one to clearly illustrate the doji gap up and taking it back up. I would suspect test of the 600 level, then a test of the 625 level. Zag. That's a nice reversal. This one I wouldn't be afraid to be buying on positive trading tomorrow using the halfway point of today's candle as your stop. NTE. Whoops. The Shaw. Tazar. Another one that you can be buying on a little breakout today using the halfway point of this candle as your stop. The reason you want to use the halfway point, number one, that's where the Japanese say the bears are back in control. Number two, you're back into this trading range which it broke out of. You want to stay out of it. Yeah, let's see. This one's NTE. Nice looking chart. This one you can be buying on strength. CTRP. Good little J-hook type pattern setup. This one you can be buying, especially on a positive open, using the halfway point of today's candle. We did jive Intel. Intel, you don't want to buy at this point. Let's see how close it is to the T line. No real powerful signal. So we still, even though there's signals, we still need to see it get through the T line to show us that there's strength in this one. Greg, I'm hoping you're not looking for First Solar because that's going to be a lap. First Solar, you want to buy on strength because it'll be breaking out through the top of this this wedge. And XLV, this one you want to buy if it opens positive. If it opens lower, you close out the position. ZQK, another one that if it opens positive, breaking out of the J-hook. Notice a left-right combo with a gap up, and it uses the T-line as support. This has all the indications of it going higher. Good one, Kunar. Good job. You need Caterpillar. Gap up. Stand above the T-line. You can hold on to this one. Just be aware of what your price movement has to be to make a significant return. AT&T. Just barely got above the T-line. Closed down here at the, or got to the 200, closed on the T-line. If it comes back up through the high in the 200, you want to be buying. That tells you that it's not resisting anymore. Halliburton, another one you stay long as it stays above the T line. Yeah, Jim. GG, nothing there to make me want to go long. If this one opens lower, you might want to consider going short. And SDS, stay short until you see a buy signal. RGR, another one that got a hanging man. I wouldn't want to see it trade lower, especially coming down through the halfway point of this candle. If it comes down through there, they're coming down to test the T-line. Google, another one that's in a downtrend and staying in a downtrend. I wouldn't be playing with this one on the long side right now. Priceline, you got to be careful again of what your rate of return can be, but it's in a slow uptrend. It's got to break through the 200. We did Apple, SYKE. That's just flat. I wouldn't be long or short. this one. And NSU. The bounce off the 200, doji gap up, stayed above the T line. If it opens positive, you can be buying. If it opens negative, if you own any, you want to close it back out. FXEN we did as oh, there's Jim. Okay. That one you can buy on positive. FXEN you can buy on positive trading. How long do you generally do your quick swing trades last for options? Same amount of time, 2 to 10 trading days. Remember, the options aren't any different than buying the stock. It's just another method to buy the stock. So your trading strategy doesn't change. It's just the vehicle that you're buying that position changes. MYL, stay long until you see a sell signal. At this point, I wouldn't want to see it trade below today's low. AMD. AMD, you don't want to be in it. You had another bearish engulfing signal at the T line. I wouldn't be in it. A doji sandwich. Oops, we're not going to see it on this chart. A doji sandwich is a big candle followed by a doji. And then if the next day opens positive after the doji, the third day's candle is going to be the same width as, or the same length as that first day before the doji. I'll see if I can come across one here in a minute. Intel. Isn't that a bull kicker on Intel on Friday? Technically, yes. Except it's not a very big day. Usually a kicker signal, you can see there's a big difference day. Now, technically it is, but not a strong enough, what I would say was actually a true kicker to the point where I'd say it's going to ram through everything. I'd still be watching this. Let's see, GSPC. Now that might be. I don't know why I'm getting a different. Showing only 86,500 a day, but that's a good looking chart if it's got the volume. NVDA. Okay, there's a doji sandwich. Big day, then a doji. Then we have a simple rule about a doji. It's going to move in the direction and how they open it after a doji. So if they open it positive, you want to buy immediately because this candle usually will be equivalent to this candle right here. So even for a day trader, it becomes a very high probability profitable trade. MCP. There's a doji sandwich potential. So if it opens positive tomorrow, you buy immediately with the expectation the price move is going to be about the same as that right there. Okay, CSCO, just stay with that one. All right. Let's see, EXPE. Slow uptrend. Nothing that I'd really get excited about other than hold it if you own it. All right, I guess that's about all we got tonight. I think the market is obviously above the T line, so we're in an uptrend. INT, didn't we just do this? Said yes, it was a bull kicker, but not a very strong one. It was more technically as a bull kicker, but a bull kicker, you want to see a substantial move one way, and then the next signal substantial. All right. Everybody have a good evening. We'll see you in the chat rooms tomorrow. Hope everybody's making good money. We'll see you then.